Welcome back. I'm Pratap here. Today is 29th November 2023. Please look into this NIFTY chart. Yesterday we have discussed about two scenarios. The scenario one is with a gap up, this 75 minutes supply zone will be broken. Or another scenario, if the supply is very strong, the prices, it will further push the prices down. So the first scenario is executed. So we can delete this supply zone. Now prices are entering into the daily high liquidity supply zone. Look into the 75 minutes, how I fine tuned. So we have identified a leg candle, base candle, and then we have a leg out. This is the 75 minute zone. But again, we fine tuned at 15 minutes level. Inside this high liquidity supply zone, we have a drop, base, and again we have this is a drop candle. The hidden body is there. This entire thing with gap. And the main reason for this gap is this 15-minute supply zone. So probably there could be some strong order flow in this zone. That is one possibility is there. And again, look into this 75 minutes. The 15 minutes is not very clear here. That's why I went to the 5 minutes. There I identified a high liquidity zone at the 5 minutes level. So let us look into this. We have a drop, base, drop. We have a drop, base, drop. So I have fine-tuned this zone based on the type 2 proximal entry. See here how it is holding the prices. So this 5-minute zone is acting as a high liquidity zone inside daily high liquidity zone. And moreover, this 5 minutes is there inside the 75 minutes zone. This 75 minutes is inside the daily high liquidity supply zone. So probably there could be some strong order flow inside this high liquidity zone. That possibility is there. So this 75 minutes, this 15 minutes supply zone and this 75 minutes, the actual order flow is in this high liquidity 5-minute zone. It is started inside 75 minutes. So these two are very critical to confirm the future direction of this Nifty 50. The upcoming direction of Nifty 50 is depending on these 15-minute zone and 5 minutes. If these two are broken, probably easily this high liquidity zone will be broken. That is what I am thinking. The reason is, if you look into the 75-minute zone, other than this drop base drop, I didn't find any other 75-minute zone inside this. So that's why we should carefully observe this zone. And if this is if there is a strong order flow in this 15-minute zone or inside the 75-minute zone, probably we can see another push up to the next demand zone, daily demand zone. So what is the next daily demand zone on Nifty? What is this candle? It is looking like a base candle, right? Look into the hand symbol where I pointed the candle. This is the one. But actually, this is not a base candle. This is a leg candle. Previously, I explained about hidden body concept and hidden zone concept in our training program, especially in the practical sessions. If you did not listen, the hidden body and the hidden zone concept, please attend our practical, I think third practical and fourth practical sessions, I have explained these concepts. That is lesson 9, part 3 and part 4. So we have a body from this close until this. So obviously this candle will look like if we add the hidden body, this candle will look like a leg candle. And after that we have four candles which are participating in the base. So you will be having a demand zone something like this. Let me change the color. This is the newly created demand zone today. From the previous candle, this red color candle, whatever you are seeing, from this close, you can add the body. That is the hidden body you can add. So we have a leg in, and then we have 4 base candles, and finally we have a leg out with gap. But how strong this demand zone is going to be, we don't know. We cannot confirm. The strength of this demand zone is depending on the price action at this supply zone. If this supply zone is broken, then we can confirm this demand zone is a very strong demand zone or high liquidity demand zone. And moreover, soon this demand zone is also going to get EMA confluence. Those who already learned demand and supply zones concepts, you might be aware of EMA confluence. So this is some observation you have to see. At least you may get some opportunity. This, whatever the gap is there between this supply zone and demand zone, that could be your profit margin if you go for short trades. So those who trade only on NIFTY, now you can look for some short opportunities. Maybe tomorrow or the next trading day. But one point you should not forget, this Friday, that is tomorrow, is going to be F&O expiry date. That is monthly expiry date. So you should be very careful because unexpected things will happen on monthly expiry dates. Sometimes, not always, sometimes. So this is about NIFTY. Now let us look into the stocks generated in our previous report. 4 stocks are identified, high liquidity zones. One is ABB. We did not get a trade in ABB. Yesterday, ABB has given a very good profit. See the rejection. But this stock was not listed in our previous report. Yesterday only it is reported. It was generated. So today it didn't enter into this zone. So we didn't get the entry. And Hindalco. Look into the Hindalco. The moment it reached into the zone, how much profit it has given. Huge profit it has given today. It reached the target and again slightly it recovered and closed. But from this zone until this 15 minutes demand zone, it reached the profit. But it is not a valid trade. You cannot take this trade. The reason is the risk point of view, it is not acceptable. If you take an entry at this zone, this is a fresh zone. Why we need to take an entry at this zone? Because there is a professional gap. Professional gap is a area where we can get the long opportunities or short opportunities. Because this professional gap, it is in the supply zone, so it gives a short opportunity. Generally, we take an entry at the professional gap if the risk is within our permitted level. But here risk is not permitted level. Look into this. We have a 75-minute zone here. From there, see the leg out. Let me go to the 75 minutes time frame, you get even better clarity. But this is a old zone, almost 1 year back, more than 1 year back. So I can say 1.5 year back, this zone was created. And today, first time prices entered into this zone. So let me go to the 75 minutes time frame. See here we have a ERC candle as a leg-in, then we have 4 base candles, and then we have a drop candle with gap. So what I did again to minimize this risk, fine-tune to 15 minutes level. So let me go to the 15 minutes level. Fifteen minutes, so many candles. We have to go back. Sorry, this is 5 minutes. 5 minutes sufficient data is not available in TradingView to fine-tune the zone at 5 minutes level. Because the data is not available in TradingView, we have to limit to 15 minutes. So 15 minutes, we have a drop candle. We have a drop candle, and then we have 2 base candles, and again we have a drop with gap. See, if you are taking this daily zone, proximal line of this daily zone, see the gap, how much width is there. So you cannot take this huge risk. Can you take this much risk? Let me draw the trend line to bring clarity. Can you take this much risk? So let's go to the latest data. See how much risk we are supposed to take. This is supposed to be your risk. And look into the reward. Same thing if you keep. So your risk is more than the reward. It is not even 1:1. Because this is a 15 minutes time frame. See, we have a drop candle, 2 base candles, and then we have a rally candle. So DBR is a zone pattern. And today at what time? 10:15 it reached the zone and gave the target at 11 o'clock. Within 45 minutes, it has given a profit of 9,800 rupees, which is 6.65% return on the investment. But these figures are only on the paper, they are not the real. The reason why I am saying it is on the paper, just for checking how our high liquidity zone is working, we identified these values. But actually, practically, it is not a valid trade because of the risk management point of view. High liquidity zone did its job. After entering into the zone, pushed the price down. The reason for the push is because of professional gap. But why it is not a valid trade? The reason is due to the risk management. Our risk management is not permitted this trade. Because it is not permitted, we missed an opportunity of getting 9,800 rupees profit, which is 6.65% ROI. But sometimes you have to accept. If your risk management does not support, you may lose some opportunities. because you never know how it is going to. Suppose you have taken the risk, high risk, you accepted a high risk and took the trade, but a trade went against you. How much profit we would have got? We would have got more than 10,000 rupees or 11,000 rupees profit, because risk is more than the reward. Your reward is 9,800, your risk could be maybe around 11,000 rupees or 12,000 rupees. Can you lose that much capital? Whatever supply demand zone price action risk management is telling. You are not permitted to lose. You are not permitted to lose more than 2% of your capital. Your risk should not be more than 2% of your capital. So that is the reason why this is not a valid trade. Even though the zone worked, it did its job. Even though it is high liquidity zone, still we should not take a risk beyond what our supply demand zone price action is recommending. So this is one important lesson we have to learn from this stock. So that's why this is not a valid trade, even though it is successful. And the next one is, that means we didn't get the trade. Actually, we are supposed to take a trade once price is entered into this supply zone, the one we fine-tuned inside. So it takes more time to get into this area, because all this professional gap, the pending orders in the professional gap has to be consumed. So it takes some time to get into that area. So the next one is Jindal Steel. So Jindal Steel didn't enter into this zone. Remember, there is one important learning here. Currently, Jindal Steel is between, prices are moving between high liquidity demand zone and high liquidity supply zone. Let me go to the daily time frame. And when this Jindal Steel zone is created somewhere in August 2010. Remember, this supply zone is created in the year 2010. And it is already tested. And we have LOTL zone inside. This is a high liquidity zone because of this long, what to say, leg out candle. I don't know, this much huge leg out is formed because in 2010 there were many false trades in the opening hours of the market. Morning at 9:15, there were so many false trades, especially some 10-15 years back. Nowadays, exchanges fine-tune the software algorithm. Still, once in a while it occurs. But those days is not like that. Almost, especially until 2010 and 11 or 12, I think 2012, if I am not wrong, NSE upgraded their algorithms in their trading system. But before that, almost every stock, we used to see some false trades at morning 9:15. This problem is almost minimized, but still it is happening once in a while. There are reasons why it happens like that. Let us don't get into that now. But by seeing this much huge candle, I'm thinking there could be a false trade. Maybe one or two orders might have been executed here. And after that, prices might have dropped down somewhere here. Because of that, see, just because of that one or two orders, it is showing how much big candle. Such kind of candles will disturb our analysis. So that's why I have some doubts about this entire zone. But luckily, we have LOTL. One more zone is created inside this. Recently also in our training program, we discussed about LOTL scenarios. I think in lesson 9, lesson 8 in our training program, if I am not wrong. And now this zone is actually controlling the prices. the LOTL zone, which is inside this this high liquidity zone, is actually controlling the prices. So we can, time being, we can consider this is the high liquidity zone and having proper structure, this one. The prices entered just before that, here prices, this is the first time entered, second time some rejection, third time some rejection. That means a lot of order flow keep on adding into this zone, institutions. Here again they have failed to reach. So some strong order flow is there just before this zone inside. Now prices again recently entered into this area. Now in the recent price action, I have drawn the 75-minute zone. This is a fresh 75-minute zone. Let me go to 75 minutes time frame to bring clarity. This is a fresh zone we should aim for actually. But here if you observe carefully, this is a 75-minute zone. This is also a high liquidity supply zone. So we have a daily high liquidity supply zone. Inside we have a 75 minutes high liquidity supply zone currently controlling the prices. See here, this is after that there were rejection prices were trying to enter. We have already discussed the entry buffer concept. So once these entry buffers are pending orders are consumed, now prices entered into this. Inside this, keep on creating new supplies. If you observe, inside this new supplies are again keep on getting created. Inside this 75 minutes. This is a new 75 minute supply zone. Again, this is a new 75 minute supply zone. So what I did, I fine tuned to 5 minutes level inside this. And recently, the prices consumed all the orders. So there could be two possibilities here. One possibility is this zone should be broken and then above that. But this zone will definitely will broke. No. Mostly may not be possible. The reason, again within 75 minutes, 15 minutes level, they were creating new supplies. Look into the 15 minute zone, you will get clarity. Let me change the time frame to 15. Here again you see you have a rally candle, we have a base candle, drop candle. If you draw a 15 minutes, you will get a zone something like this. Inside the 75 minutes. That means institutions are always making sure to create new supplies again and again inside this. Why again and again they are creating inside? Because this is a high liquidity zone. That is how institutions' behavior will be there in high liquidity zones. They always make sure pending orders will be there again and again. New pending orders. Old pending orders will be consumed. It is consumed here. The moment it is consumed, again they are creating new pending orders. That means new orders they added into this zone, which created a new zone again. That means again we may get another possibility next time. Until this zone is broken, we have to take some risk in this zone. If the risk is with, you have to fine tune this zone so that our risk will be managed in a proper way. So you have to fine tune at 15 minutes or 5 minutes level. In case one day definitely this zone will be broken, that day again take trade and just above there is one more fresh zone. In this fresh 75 minute zone you can fine tune and then you can take a trade. That is the way you have to plan for this supply zone. But you have to understand how it is holding the prices. Similarly, we have a newly created high liquidity demand zone here. See, we have a rally candle, we have a base candle. So this is the hidden zone concept. We have a hidden body. If you add the hidden body, it looks like a leg out candle with a huge body. That's why this is a hidden zone. Most of the people think it is not a valid demand zone because all these candles are looking like base candles. But actually this candle is not a base candle, it is a leg out candle with hidden body. Previously also I told you, I think during that training session I told you, most of the time these hidden zones work very well. Because purposefully institutions are creating such kind of zones to divert our attention. That means they are giving importance to this zone. Anyway, this software is identified this as a high liquidity zone, demand zone, according to our software. This is a high liquidity supply zone. When prices are traveling between high liquidity demand and supply zones, most of the time prices will be moving within these zones. Previously, once we have seen HDFC AMC, it has given a very good return. So we don't know how much return this is going to give. So I'll keep this Zendal still in our watch list. Don't delete this stock after today. Keep it in your watch list. Keep on observing whenever you are getting opportunities, whether our stocks near demand zone and supply zones, whether they display this stock or doesn't display, but you keep follow this stock. I will also keep this in the watch list until one of these high liquidity zones are broken. That day I will remove from this watch list. So Jindal Steel is one stock you have to keep in your watch list. But today we didn't get any trade in this stock, but a lot of learning is there from this analysis. And this is your exercise that I have given you in our Telegram group. If you would have followed our exercise, it would be a good learning for you to identify how to break. This is a 75 minute zone, high liquidity zone. This stock is about 75 minutes high liquidity zone. So let me directly go to 75 minutes time frame. Let me delete whatever I fine tuned here so that I will explain everything from the fresh way. So this is our high liquidity zone, which is broken today easily, very easily it is broken. Why it is so easily broken? We know the reason this is going to break. I already explained earlier, when a high liquidity zone or even normal zone also, demand zone or supply zone, when most likely they will be violated. How we know in advance they are going to be broken? We will not say they will compulsorily they will break, but there are higher chances of breaking. Why we are not saying definitely 100% it will violate? Why we are not saying that point? The reason is if institutions again create a new supply inside, definitely the zone won't be broken. The zone will be broken provide institutions does not create a new high liquidity, a new supply zone, need not be high liquidity, a new supply zone inside this high liquidity zone. The day when institutions doesn't create, this zone will be broken. So how we are saying this zone is broken? See, yesterday itself, when I displayed this stock, we have seen one rejection in our report. I told you there is a rejection. That means one of the zone might have been, one of this inside this lower time frame zone might have been already tested. So you should look for a dip entry or a fresh zone inside. That is what I indicated yesterday. I didn't analyze the stock yesterday. I just generated during our session while I am recording, and I saw the zone and I told you. I saw the rejection and I told you. I just warned you. After that, when I analyzed it after our video recording session, I analyzed, I have seen all the conditions I explained earlier. When a zone is going to break, that means when a zone is going to be violated, whatever the condition I explained in that earlier video, everything is met inside this zone. That way I confirmed most likely this is going to be broken, provide institutions does not create a new supply. So today institutions did not create any new supply, and remaining conditions are not in our favor, so easily it is broken today. So what I told you earlier, what I explained you earlier in one of the videos, you can identify that video in our NeoStock terminology playlist. You can identify when a zone is going to be violated. So let us discuss those scenarios because many new members joined again. Probably you might not have looked into that video. So there is nothing wrong in revising. So let us go to the lower time frames. Lower time frames will always give you a clue. What is lower time frames? The time frames below this time frame, generally we call them as lower time frames. Lower time frame is not the LTF zone that you have learned in supply demand zone. I am using general English word lower time frames. So let us go to the 15 minutes time frame. So what I did, I tried to draw 15 minutes inside 75. That is the rule we follow. We go one time frame below and we will try to draw the zone. So here I have identified one rally candle, base candle, and then we have a drop candle. It's not a great leg out, but okay, acceptable. So I have drawn the zone. See here the rejection we have seen in the 75 minutes time frame. Let me show you in the 75 minutes. See, this is the rejection. See, now this rejection went into this zone. That means this 15-minute zone is already tested. After that, there is a huge rejection. Once this 15-minute zone is tested, can we say it is a fresh zone? So it is no more a fresh zone. There are two possibilities. Still, if you are believing on this particular zone, you can take a deep entry by fine-tuning this. If you fine-tune, this is not tested, you can take. But when we take this kind of deep entries, if this 15 minutes is a high liquidity zone, we can take such kind of entries. But this 15 minutes is not a high liquidity zone, it is a normal zone. Moreover, the structure of the leg out is not very great. We have compromised and we took this. Because this 75 minutes is a high liquidity zone, sometimes we can compromise. At least one entry it will work. That is what worked here. It gave a good return after this. Very good intraday return it has given. But second time, is it going to work? Definitely it is doubtful. The reason is this 15 minutes is not a high liquidity zone. Okay, now can we find any other zone inside this 15 minutes? Yes, there is one more zone is there. This is the one. We have a leg in, we have a base, and then we have a drop. This drop candle is excellent drop candle, no doubt in that. But what happened after that? The prices entered into the zone and gave a intraday, very good intraday profit. Again prices went up and this particular zone has given and then again came down. So everything is tested here. We didn't find any fresh 15-minute zone inside this. We have identified two 15-minute zones and both these 15-minute zones are already tested. So how to trust this zone is going to work? We can trust if one of these 15-minute zones would have been a high liquidity zone, we would have trusted. Because 15 minutes high liquidity zone or 5 minutes high liquidity zones, at least a minimum 2 to 3 test they will give some returns. At least minimum 2 or 3 maximum. Already tested first time, if it is a high liquidity, at least the second test it will work. But they are not high liquidity zones, they are normal supply zones, which are tested inside the high liquidity. When all these conditions are against you, how can you trust this zone is going to work? Exactly these points I explained in the earlier video also. I think around 3 weeks back, if I am not wrong, or 4 weeks back maximum. I have explained the same points. Same thing again you observed in this talk. L&T Mindtree. And today what happened? Easily all these zones are broken in just one candle, that is 9:15 candle. Everything is gone. Okay, this is a 9:20 candle and 5 minutes time frame. If you look into 1 minute, which candle actually broke all these things? The 9:21 candle. See, it has given some rejections, but they're temporary. They will not give you enough profit because there will be some pending orders will be there. See the rejections. See the rejection. That is not good enough to push the price down. Why we are against to go for a second trade if it is not high liquidity? Because the existing pending orders are not good enough to give you a good push down so that it will reach your target. Even this zone, the zone below this is also given some push down. But this is not sufficient enough to get a reward, good reward. So that is the reason why most of the times we avoid second trade if the zone inside the high liquidity, the lower time frame zone is not a fresh zone. See, one point you have to observe in all our trades, mostly we are taking our trades in a fresh zones at the lower time frames. The higher time frame, the zone we selected, the HTF zone we selected is a high liquidity zone, which is testing again and again and again. The simple reason is inside the zone, institutions again and again and again, they keep on creating new supply zones if it is a high liquidity supply zone. Or they keep on creating demand zones, new demand zones again and again if it is a high liquidity demand zone. If it is a normal demand zone, institutions don't create again and again a new zones. With the help of some special complicated software algorithms, we are able to identify all these things. Well in advance. Even the zone is a fresh zone, we are able to identify. This is the zone. Institutions in future, again and again, they create. That is what happening most of the times. But sometimes it doesn't happen. When it doesn't happen, whatever we discussed in this zone, when we encounter such kind of situations, they give us early indications. There is something wrong. Institutions are trying to trap us. At higher time frame level, they are showing it as a high liquidity zone. When we really go to the lower time frames and analyze, we are seeing the actual picture. And that actual picture is helping us not to take trades on that zone. That's why always we are doing top-down analysis. At least from daily time frame, we are doing top-down analysis if our daily zone is a high liquidity zone. Generally, we do top-down analysis from at least from monthly time frame onwards in a normal situations. But high liquidity zones, we don't require to get into monthly. We are taking high liquidity zone as a reference, and from there we are going to the lower time frames. If daily is the high liquidity, we are going to 75 minutes. From 75 minutes, we are going to the 15 minutes. From 15 minutes, we are going to the 5 minutes. Because most of the time we give least importance to trend and location, that is curve. We give least importance. We give importance, but least importance for high liquidity zones. Because the location means curve or the trend. Mostly, whatever they are, still they will not be playing against to the high liquidity zone. That's why high liquidity zones are such a powerful. If trend is in our favor and your curve is also in our favor and the zone is high liquidity zone, probably it will give you a great return. Even if you hold it for a few days, still you get at least 30,000, 40,000 profit you get within 3 to 4 days. But during intraday, we are getting DIT profits, not HIT, not hourly income profits. During intraday, we are getting daily income trade profits. That is short-term returns we are getting. Most of the times, we have seen. Because these are all the high liquidity. That's why we are taking some decisions against our demand and supply zone principles. We are not strictly following every principle we land in demand and supply zone as it is for high liquidity zones, especially the trend point of view as well as the curve point of view. The another name for curve is location. So those things you have to observe with respect to high liquidity zones. And also we know the reasons when a high liquidity zone is also going to fail. That means when it is going to be violated, we know the reasons in advance. So this is another session. We discussed the points once again. But otherwise, this LTIM, that is L&T Mindtree, is not a valid trade, valid zone for taking the trades. And finally, we haven't got any valid trade today. In one trade, the zone is failed. Still, we did not take trades. In another zone, the trade is, the profit is successful. That is Zendal still, but still we didn't take the trade because of the risk point of view. Zendal still, sorry, Hindalco. For the risk management point of view, we did not take this trade. That means we didn't have a trade, a valid trade, as per our yesterday's report. So this is about our stock analysis, and this session is definitely will be useful to many of you people because many important concepts we revised in this video. So those whoever listened this video completely so far, definitely all these concepts will be useful to you and you have to remember all these principles. So this is about the analysis part. Now let us generate demand and supply zones. And one problem I am facing is every day, like our members keep on requesting zones for different time frames. I don't mind to generate the zones for different time frames, but the problem is like generating the bullish, bearish setup, all these things for all the time frames is a time consuming. At least 75 minutes is good enough. 15 minutes, I don't know how far they will be useful to you. Previously also, I explained once some practical problems you will be facing. The zone the report is showing, but below that there could be a valid, so just below that. Because software always displays the nearest demand zone and nearest supply zones to our current price. But if you want to look into all the zones below the current zone and similarly above the current zone, if you want to see, you need to generate a different report. That is our supply demand zone chain. This report is stock specific. We cannot generate these reports for every stock because we have 200 plus stocks including 17 indices. It is practically impossible. That's why I am not generating a supply demand zone chain unless there is a request from you. Previously, I myself limited to daily time frame. The reason is I was under the impression you will be in a position to fine tune daily zones to 15 minutes level, 75 minutes level, 15 minutes level, and as well as 5 minutes level. At least you have to fine tune manually that part. But you are expecting zones from all these time frames again, generated from the software. So what I do, 125 minutes time frame, I will generate only stocks near demand zone and near supply zone. Similarly, 75 minutes also near demand and supply zones. 15 minutes also near demand and supply zones. I will try to avoid the bullish setup stocks for all these time frames. because it's taking a lot of time. In case if you feel you really need, I don't know, but the reason is nobody is mentioning anything in the feedback session of our reports. Whether really these you are using bullish setup stocks or bearish setup stocks. If you are not using and I am keep on generating and unnecessarily we are increasing the video time. The biggest problem is not explaining the video. If the length of the video is getting keep on increasing and YouTube is taking a lot of time to process the video. See, for a 10 minutes video, probably YouTube is processing for another 5 to 10 minutes time maximum. But 2 hours video, if it is a 1 hour video, if it is a 1 hour video, they are taking more than 2 hours time for processing. Double the time they are taking. So that means if the video time is keep on increasing, the processing time is increasing in an exponential way. So one idea I got is probably I need to upload multiple short videos for analysis part one video and daily zones one video, maybe 125-minute zones one video, 75 minutes one video. That way I have to generate multiple videos. But my effort is also valuable, right? So that's why myself is limiting to do few activities. But which activity I should do? I may not be knowing unless you clearly mention what you want. The problem I am facing, you are not in a position to tell what you really want. You are telling just I want 125-minute zones or I want 15-minute zones. That is a vague statement. Do you want stocks near the demand and supply zones for 125 minutes? Or do you want a bullish or bearish setup related stocks related to 75 minutes or 15 minutes? So such kind of clear requirements if you mention, at least I can compile all your requirements. I can take a decision what you really want as a whole. First of all, I don't know how many of you are seriously following these reports. Because I know many of you people are attending the training sessions than the trading sessions. Based on that, I assumed most of you people are still learning, not yet entered into the trading. Maybe you will be in a position to enter into the trading after completing the second phase of the training by end of this December month. You will be in a position to get into the trading. But remaining people, I don't know how many of you people are seriously looking into the trading. At least if you comment in the comment section, I will be able to know. Only 2 or 3 people are always mentioning their requirements. Remaining are not mentioning. That's why I'm having a big confusion what kind of reports I should display or what kind of reports I should avoid. So that is the reason why today I am deciding to generate only stocks near demand zone and supply zone. If you really want anything, please mention in the comment section. If you don't mention anything in the comment section, I will assume you are looking for only the stocks near demand and supply zones. Is it clear? Okay. Now let me generate only daily time frame. I will generate the complete report. Remaining time frames, I will give you only stocks near demand and supply zones. So let us generate demand and supply zones for daily time frame. So entry time frame is daily. Let us find the stocks which are near to the daily demand zone. These 5 stocks are near to the daily demand zone. So look for the high liquidity zones. You know how to do that, right? So let me go back. Entry time frame is daily. Let us find the stocks which are near to the daily supply zone. So look for the high liquidity zones from this list. So let's go back. For entry time frame daily, let us find the stocks which are closed inside the daily demand zone. So these 10 stocks are closed inside the daily demand zone. See, always pause the video when whichever the list you are referring, because I'm giving only few seconds time. So let me go back. Entry time frame is daily. Let us find the stocks where price closed inside daily supply zone. So this is the list, filtered list. Total 53 stocks are closed inside daily supply zones. Now let us find the tested zones. Entry time frame is daily. Let us find tested daily demand zones. Only one demand zone is tested. So let's go back. Entry time frame daily. Let us find the tested supply zones. So total 28 supply zones are tested today. Let's go back. Entry time frame daily. Let us find the stocks having newly created demand zones. This is the list. Nifty 50, Nifty Bank, Nifty Financial Services, Nifty IT, Nifty Private Bank. For all these indices, new demand zones are created today. So total 28 stocks are having newly created demand zones. So let's go back. Entry time frame daily. Let us find the stocks having newly created supply zones. So no supply zones are created today. So let me generate demand and supply zones for all the stocks for your reference purpose. Entry time frame daily. Without filters, I am generating the complete list. I keep on scrolling this list, whichever the stock you want to refer. There you please pause the video and then you can study. I'm giving you only few seconds and then I keep on scrolling down. So this is the complete list of all the demand and supply zones for the 201 stocks and few indices in this list. So this is about the reports for the daily time frame. Now I will generate demand and supply zones for the remaining time frames, that is 125, 75 and 15 minutes. Why not 5 minutes? 5 minutes also I will generate, otherwise somebody will again raise the request, I want reports for 5 minutes. I think even 25 minutes is also there in this list. Okay, 125 minutes. Let us find the stocks which are near to the demand zone, 125 minutes demand zone. So these 7 stocks are filtered where price closed near to the 125 minutes demand zone. So let me go back. Entry time frame 125. Let me find the stocks which are near to the 125 minute supply zone. So these 14 stocks are filtered where price closed near to the 125 minute supply zone. So let's go back. Now let us generate stocks near 75 minutes demand zone and supply zones. Entry time frame is 75 minutes. Let us filter the stocks near to the 75 minutes demand zone. So these 9 stocks are near the 75 minutes demand zone. So let's go back. Entry time frame is 75 minutes. Let us find the stocks which are near to the 75 minute supply zone. So these 5 stocks are near to the 75 minute supply zone. So let's go back. Now let us generate demand and supply zones for 25 minutes time frame. Let us find the stocks which are near to the 25 minutes demand zone. So these 3 stocks are near to the 25 minutes demand zone. So let's go back. Entry time frame 25 minutes. Let us find the stocks which are near to the 25 minute supply zone. So these 11 stocks are near to the 25 minute supply zone. So let's go back. Now we will generate for 15 minutes. Entry time frame is 15 minutes. Let us find the stocks which are near to the 15 minutes demand zone. So these 4 stocks are filtered. So let's go back. Entry time frame is 15. Let us find the stocks which are near to the 15 minute supply zone. So these are the 5 stocks filtered for the 15 minutes time frame. Now let us generate for 5 minutes time frame. Let us generate for the 5 minutes time frame. Entry time frame is 5 minutes. Let us find the stocks near the 5 minutes demand zone. So these 6 stocks are filtered. So let's go back. Entry time frame 5 minutes. Let us find the stocks near to the 5 minute supply zone. So this is the filtered list. These 9 stocks are near to the 5 minutes supply zone. So this is the complete list. Now we have all the stocks near demand and supply zones starting from daily time frame until 5 minutes time frame. Okay, now somebody may ask, what about weekly and monthly? Let us generate those stocks also. Why should we compromise? So entry time frame is weekly. Let us find the stocks near to the weekly demand zone. So these 4 stocks are near the weekly demand zone. Let's go back. Entry time frame is weekly. Let us find the stocks near to the weekly supply zone. So these 8 stocks are closed near to the weekly supply zone. So let's go back. Now let us generate for monthly time frame. Let us generate for the monthly time frame. So entry time frame is monthly. Let us find the stocks near to the monthly demand zone. So this stock is only one stock is near to the monthly demand zone. So let's go back. Entry time frame is monthly. Let us find the stocks which are closed near to the monthly supply zone. So these 2 stocks are closed near to the monthly supply zone. Let us do it for quarterly also. So quarterly time frame. So entry time frame is quarterly. Let us find the stocks near to the quarterly demand zone. So these 2 stocks are closed near to the quarterly demand zone. So let's go back. Entry time frame is quarterly. Let us find the stocks which are closed near to the quarterly supply zone. So these 2 stocks are filtered where price closed near to the quarterly supply zone. Now let us generate the report for half yearly also. So half yearly reports. So entry time frame is half yearly. Let us find the stocks where price closed near to the half yearly demand zone. So this stock is near to the half yearly demand zone. So let's go back. Entry time frame is half yearly. Let us find the stocks where price closed near to the half yearly supply zone. So this stock is closed near to the half yearly supply zone. Now the last one will generate for yearly also. Entry time frame is yearly. Let us find the stocks which are near to the half yearly demand zone. No stocks are there. The entry time frame yearly. Let us find the stocks which are closed near to the yearly supply zone. No stocks are there. So only yearly time frame, we didn't get any list. So this is about the complete list of all the stocks near demand and supply zones for all the time frames that is supported in NeoStock software. Hope this information is useful to you. If you have any specific comments, keep them in the comment section so that I will understand. Always mention your requirements. Don't mention vague requirements. Clearly explain your requirement. That will help me to generate the reports according to your needs. If you are not generating, and if I am generating something which you don't require at all, probably that will be wasting your time as well as my time also. Hope you understand what I am trying to say. Always make your request specific, exactly to the point. Hope this information is useful to you. Let us meet again in our next video tomorrow. Thank you.